Everybody, welcome back to the Lagforex channel. Now, quite simply today, as you'll probably see by the title, this is going to be a part one in just a two-part series, nothing major. I just wanted to run through how you can choose what type of trader and what trading style to adopt, because when it comes to trading the market, there is so many different approaches, different strategies, different ways to view the market, to analyze them, all these different factors, and I'm going to try and round it up perfectly, simply for you to understand, so you can actually decide what kind of trader you want to be. So the reason I have decided to split this up into two parts is because I've just recorded the part two, and that was going to be a video by itself. However, I felt like there was going to be a few unanswered questions because I didn't delve into enough depth when it came to each of these different styles of trading. I just gave you a lot more of a live example of what I do. So if I bring this video out first, lay down the foundations, and then hopefully when you watch part two, it'll make a lot more sense. You'll understand where I'm coming from and how you can take that knowledge and digest it a lot better. So starting off, there's a few questions that you should ask yourself when trying to decide what kind of trading style to adopt and what trader you want to be. So the main question is, how much spare time do you have? What does your routine look like? Are you somebody who works full time, long hours? You know, if you are somebody who is working in the health and social care and you are working 12-hour shifts, I'm sure by the time you get home, you make dinner, do whatever, you probably don't have a lot of time, and therefore you'd have to use your days off to actually analyze a market, look to place trades, so on and so forth. Now, everybody's got a different routine. You may just work 9 to 5. After work, you can come home, you can do your analysis and trade, and then maybe you can go on your phone throughout that shift on your breaks. Maybe you can't. Everybody has a completely different routine, different responsibilities, and different flexibility when it comes to time. So that is the main factor you want to actually think about and decide first. How much time can you dedicate to this? And be realistic, because you don't want to set standards that are too high or too low. Just make sure it's quality work, because this is going to tie over with your profits and how the trade's going to run out. Now, another thing that you need to ask yourself is, for starters, are you an emotional person? Because if you are, that's more than likely going to mean that throughout trading, your trading psychology is going to be easily affected by the certain factors that can affect it. If you're somebody who is emotional, it means that when something happens with your trade, you're initially going to have a massive response. You're going to let this cloud your judgment, cloud your vision, make impulsive decisions that you later regret. So that is also going to have an impact on what type of trader you're going to be. On top of that, maybe you aren't an emotional person, but you still just have poor trading psychology. You've found in the past, if you tried trading before, a lot of overwhelming feelings come your way when certain things happen. Now, have a think about this. It's just something you want to take into account when going on to this next step that I'll go on with you to decide what kind of trader you want to be. Now, finally, you want to ask yourself, how much are you going to rely on the profits you're going to make? So, like I said, if you're working full time, it's obviously just going to be either a side hobby or just a bit of secondary income. You are not fussed about how much you gain, because it isn't supplementing your life. It isn't covering any costs. On the other side of the spectrum, maybe you're a full-time trader and you rely on your profits for your day-to-day living, for your bills, everything like that. In that case, you are going to require more plentiful trading opportunities in order to give yourself more chance to profit. And as well as that, on top of it, if you are a full-time trader and you have to rely on profits, that is in itself a psychological attachment that you have, because throughout your trading, when you lose, you're going to be annoyed because you need those profits to survive. You need those profits to pay the bills, whatever it may be. So you're going to place a lot of reliance on you profiting and doing your analysis right, getting the trades right. So first things first, if you are relying on profits, or before you even go to rely on profit, should I say, you need to unattach that psychological and emotional effect from it so that it doesn't affect your trading at all. So now I'm actually going to give a little rundown on, quite simply, 3 different types of traders you can be. So I've got different trading styles you can have. I've basically just labeled these as long-term, medium-term, and short-term. So this is just referencing how long you will hold those trades for. So to start off with, a long-term holder, or a swing trader as it's most commonly known as, you will use the highest of time frames. And this will be to analyze, view price action, and enter on. So you're going to be looking at the 1 week, the 1 day, the 4 hour, and you are looking for those major key swing points in the market. And the reasoning why we're going to be using those higher time frames is because, to put it simply, when price approaches our point of interest and we are looking for entry confirmation, through the process of a reversal or through that confirmation being delivered, we are going to have a large time frame within which we can enter before price ends up taking off and it being too late for us to get involved. So if we're on the 1 day, for example, and we were looking for a break of structure or a Wyckoff schematic, it could take a full week for that schematic or break of structure to actually be delivered. So we have that entire week to get involved in the trade. Before that market reverses, we get in on the trade and the profits cut. So why this is great for people who have the least time is because you're not reliant on being at the market every single day to ensure you don't miss out. You will just set an alert, it will ping you one day, and then when you get the time, you can go over, look at that, place your trade using the correct risk management, and then let that trade run for weeks or even months. And this supplements it well, because if you are working full time, you don't have a lot of spare time on your hands. You're also not relying on the profit, so it doesn't matter if you are only placing a couple trades a month, because quite simply you're not relying on the profits, but you are still gaining a little bit of a supplementary income from those couple trades you are placing. Now, on top of this, there's very little emotion involved, because quite simply you place that trade, and because it's going to take so long to play out, you don't really ever have to check it. You can just set alerts where you may want to partial or manage your trade however you see fit. Set a couple of alerts, and then all you have to do is wait for those. So you could go days, even a week at a time, without having to check that trade. And if you're not checking the trade, you're not allowing any emotion to be brought onto yourself. So now moving on, we've got the medium-term holds. I would class that as more of an intraday trader. Now, this is going to apply to somebody who can dedicate a few hours pretty much every day or a good few days of the week. Now, what you're going to be able to do is you're going to be able to sit at that market for a good few hours and watch and try and let price deliver to you as you are sat there. Get involved in that market as you are sat there, and then potentially even be out of that trade by the end of those few hours that you were there. If not, maybe just hold until the next day, a couple of days. But throughout that, you should have the time available to manage it. So this is for people who maybe work part-time or even do work full-time but have the capacity to be able to check their phone or check their trade whenever they need to. As a result, you are able to manage your trade throughout the day, and because of that, quite simply, we can use lower time frames than we were as a swing trader. So we would, of course, do a top-down analysis to start off with, so starting on those higher time frames. But once we've done those higher time frame analysis, we can come down and look at the 1 hour, 15 minute, 5 minute for those intraday trades. Now, what an intraday trade quite simply means is that we are watching the trade on the day, we are entering and more than likely closing within the same day, within the same session. And what that means is that we have more plentiful trading opportunities because we are allowing ourselves to get involved in the market every single day. Now, as opposed to the long-term holds, there is a bit more emotion involved in this because you are sat at the markets, you are being involved in trades every day. Now, the opening and closing of trades is something that brings a lot of psychological effect. Now, because we are placing and closing a lot more trades than a swing trader, we are, of course, bringing more psychological worry to ourselves, more psychological stress. As a result, you'll want to have trained your emotion a bit more here, have a slight bit more experience, or maybe just trained your mind very well. I didn't make this clear, but there is also people who have a lot of time on their hands that class themselves as an intraday trader. because what they might do is, if they're not wanting to just sit at their laptop for 6 hours straight, instead they want to do a bit of analysis in the morning, go away and deal with other responsibilities, come back in an hour, 2 hours, maybe throughout the end of the day. All you have to do here is do your analysis on those slightly lower time frames, like your 1 hour, your 15-minute, because more than likely the price is going to deliver to you what you need to place a trade every few hours. So set your alerts, you'll be pinged every couple hours. You can come back, look at what's happening, get involved in the trade and hold it for that day. Now moving on to the last one, that is your short-term holder, so a scalper. That is what is more commonly known as, and this is where you're using the lowest of time frames. So 5 minute, 1 minute, even into the seconds, the 15-second. At this point, you must understand structure and price action very well. Being a scalper is very, very stressful. So as a result, you have to have very good emotional discipline and have your trading psychology in check. Now, on top of this, you have to dedicate quality time, and quite a lot of it, to be a scalper. You have to sit in front of your laptop, your phone, for hours on end and just focus on what the price is doing, understand that structure and trade it. Because we're looking on like the 1 minute or potentially the 15-second, our trades can play out in under an hour, maybe even within 10-15 minutes. So as a result, we are constantly placing, executing, closing trades. This is of course going to bring a lot of stress in our emotion, in our psychology, because we are constantly looking for trading setups. That is stressful, constantly trying to be involved in the market. If you rely on trading as a primary income, this is probably going to be the more familiar one you want to go for, just because you give yourself so many trading opportunities, which gives you so many more chances to profit from the trade you're placing. Now, me personally, I would say I'm a mix of an intraday trader and a scalper. What I will do is, in the morning, I will do my full analysis of the pairs I'm looking at. I will set alerts, and then I will go away and deal with other things for the maintenance of the business. Now, what this means is I don't have to sit with my eyes on the markets for hours on end. I can go away and deal with other responsibilities whilst I wait for these trades to play out. This is just what I found to be perfect for me, for the time that I have on my hands, for the responsibilities that I have. Now, I have recently gone more into that scalping sort of trader, just because if I have a couple hours free here and there, I will just dedicate that time to looking at the markets, watching the lower time frames, and waiting for those more plentiful opportunities to deliver themselves so that I can make more profits. The reason this works well is, if we were to compare a scalper to a swing trader, a scalper could place upwards of 10 trades within a day, given that structure played the way we wanted to. When it comes to a swing trader, it could be every 10 days that they place one trade. Now, you have to find what fits for you. Again, look back at those questions I asked at the start, answer them truthfully, and then come back over to here, decide which one fits your schedule. So just to round things up, because this has ran over massively, I thought it was going to be a much shorter video, but I wanted to ensure that I included enough information on everything so you understand what type of trader you want to be. Now go over to part 2, which will be out tomorrow, and watch how I actually run through the markets as the trader that I am. You will see me start on the highest of time frames, where I will do a more higher time frame analysis, understand what my bias is. I will then drop down to your mid-range time frames. From there, I will look for more intraday trading, so trades that could take a day, a couple of days to play out. That's where I have my alerts set, waiting for the price to deliver. And then at the end, I will actually run down to the lowest of time frames to show you how you could be a scalper. So within this, you can decide exactly what you want to do, what works for you. But with that being said, I hope you've enjoyed. Any questions, leave them in the comments, and I'll see you tomorrow in part 2 of this series.